please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back to Bazaar Morning Call. I'm afraid the year has not started off on a good note for the bulls, that is. The Sensex Nifty down to the lowest point and the mid-cap index is bleeding now, 265 points lower there. Talking about mid-caps, Brigade Enterprises is the stock on our radar now. The company has gone shopping. They've bought 13 acres of land for 218 crores in Bengaluru for developing an IT park. KP Pradeep, the CFO of Brigade Group, joins us now to talk about that. Mr. Pradeep, Happy New Year to you and thank you for speaking to cnbc TV 18. Start by telling us what the plans are with respect to this new land parcel that you bought. How do you plan to fund it, considering that you are sitting on a high amount of debt as well?
So good morning and wish you a very happy new year. Brigade, the group has taken a 12.95 acre parcel. This is in the north of Bangalore for a sum of 218 crore. The acquisition is done, so we have funded it out of internal accruals, and the idea is to build an IT park.
Okay, Mr. Pradeep, good morning and a happy new year to you as well from everyone here in cnbc TV 18. What is the trigger for this? Is it that land prices have fallen, they are available at attractive valuations and therefore it's good to expand, or is it that you are noticing adequate demand?
So it's a couple of things. One is that the location is strategic, and like I've been saying on all your interviews too, I mean the location is going to drive what we believe would be the strategy of the company going forward. And so in this particular spot we see a scope for an interesting IT park that we could build over time, and so that's driven the basic thought process of the company.
Okay. So, in terms of, the rental business, the overall rental business, there are very high expectations from the company. I mean, there are some analysts who even project a 300 crore rental business revenue by FY20. Is that a doable figure, and what kind of projections would you have internally?
So, we have a 2.4 million square foot of commercial leasing space currently. And in over a period of 3 years, we'd expect to see it go up to around 8.6 million square foot. We currently do around 240 crores on this vertical in terms of lease rental, and we should see that going up appreciably over the 3-year time period.
Is the part of this pre-sold?
No, this normally in the commercial leasing logic, we normally sell it at a point of time in the middle of the project, and so these are not technically what you'd call pre-sold, and there are different strategies around why we do that.
Okay, by the time you start selling it, are you noticing any improvement in prices? How will the margins on the IT park work vis-a-vis your current margins?
So we'll come back to you with our plans as we fructify them over time, but I should say this, I mean the rentals are pretty stable, and what we're expecting over time is that they will continue to be stable, albeit a little bit of growth as we see it.
Okay, actually 2.4 million square feet to 8.6 million square feet over the next few years is quite a jump in terms of your commercial business. I wanted an update on the transferring of the hospitality assets to a separate subsidiary that you were planning to do earlier, and you also indicated that you would be inducting a strategic partner. What's the update there?
Right, so to just get back to the earlier point on the commercial property, we have a 3.3 million square foot Brigade Tech Garden that's coming up in Whitefield, and we have a 2.2 million square foot World Trade Center Chennai that's coming up as part of the commercial portfolio, and so that's the largely the walk from the 2.4 million to the 8.6 million. And on the hospitality side, we are actively looking out for an investor, and we should probably look at something happening in FY19 first quarter. But having said that, the NCLT process for creation of the subsidiary along with its assets is currently on. We'd probably see that complete by the fourth quarter of FY18.
Okay. What about the new REIT rules? Is it making it more attractive for you to parcel any of your land, securitize them in the form of REITs?
Yeah, so in the case of the REITs, there are certain initiatives from the industry, and certain companies are trying to get to market first on the REITs. We probably will not be the first one, but having said that, we are following this very closely, and we think what will drive that is also a little bit of critical mass in this business. And as we see our commercial portfolio grow over the next 1 or 2 years, we should be ready to achieve that critical mass and keep ourselves ready for REITs.
Okay.
Just to add a point to this, Lata, it's also important how the logic of REITs is also sold, and so as I see it going forward, we should see a very interesting ways in which we'd see REITs sold as a product to the larger retail investor.
Okay. What does all this do to your P&L? I mean, are you confident that at least you will do one REIT in the calendar 2018? And if all these instruments are available, does that bring down your finance cost?
Calendar year 2018, I think, is a little early. Probably sometime beyond that, because like I said, commercial leasing should achieve critical mass for us to also go down the right route.
Okay. So at the moment, how would the finance cost look in 12 months? Does it go down or does it go up because yields are jumping?
We should see it more or less stable, but I said the debt is moving in line with the projects that we have. So we should see interest reflect that. Okay.
All told, would you say that at least the last quarter, Jan-March quarter, or 2018 as a whole, looks better than 2017 in terms of demand, price, margins?
We're just sitting in the middle of a close of the third quarter. I wouldn't want to make any specific comments for the moment, but the overall larger theme is stability, and I am sure that we will be down that theme.
Fair point. No, I wasn't asking for numbers. I was only asking for a broad direction. Okay, stability and not higher is what you're telling us. Thank you very much, Mr. Pradeep, for joining us with all those details. So that's Brigade Enterprises. I think it's important that they are emphasizing things will be stable. Don't expect higher prices and higher margins, but yes, stability, which means downside protected. Want a word on the markets, Anuj?
Yeah, interesting, because there's, as Ashwini was also pointing out, the mid caps, the large cap index might be holding on just so that there's a bit of a distribution in the mid caps. 207 point lower now in the mid cap. I just want to make a point here.
4 red to 1 green.
4 red to 1 green. I just want to make a point here, though, that we have to put it in the context. The market has had a fabulous run, and all through last week of December we had a big party, and the risk of a hangover post the party in the first week was always there. Don't still think this is a trend reversal. This is just normal routine profit taking, and maybe once again if you buy into this correction you will make money, of course. 100 points lower on the mid caps. That really is the story of the day today. The other story, of course, is that the Asian markets are positive, but our market is reeling under a bit of a selling pressure, especially from the high point. Lots of factors impacting the oil marketing company stock, starting of course with crude oil making a big move past that $65 mark. MK Surana is with us, CMD of HPCL. Mr. Surana, good morning. So, sir, can you tell us first on this monthly LPG price hike? We believe that that's now been put on back burner, but does it impact you at all, or do you think that the government will take care of that, because cooking oil for longest has been the government's problem?
Good morning to you. As far as domestic LPG is concerned, means the subsidized LPG and the PDS kerosene. On these are the two which are controlled products right now, and on that, whatever is the under recovery is being reimbursed by the government. And we are guided by the directions of the government on this pricing of these two products. So as such, whether the price of the domestic LPG cylinder is hiked or not hiked, it does not affect the companies as such.
Yeah, I take your point, Mr. Surana. First of all, a very happy 2018 to you and to everyone.
Happy New Year to you and your viewers as well.
Thank you, sir. Well, what is the actual factual position? I know either ways it doesn't hurt your company, and certainly not immediately, but has the government stopped the price hikes, or will they come but in lower doses?
No, as far as the controlled products are concerned, from time to time the government does issue certain directions, and the oil companies follow that. Because the under recoveries are fully covered on these two products. I am again repeating, it is related to subsidized LPG cylinders and the PDS kerosene. To that extent, we are purely guided.
Okay, so even the kerosene has stopped, Mr. Surana. The kerosene price hike, which was the monthly price hike, even that stopped.
No, I'm saying from time to time there are different directions.
No, but for last 2 or 3 months, there's not been a hike in that.
No, but I think January there is something, a small prices there.
So what is the directive from the government now?
No, there is no separate directives on this issue. So from time to time the directive comes. So there is no specific thing which is like even it means last 1 week or 10 days or 15 days something.
Also, Mr. Surana, on petrol and diesel, we were talking about it that maybe post the Gujarat polls we start to see. Are you still making losses now on petrol and diesel? Because that is where which is not controlled, right? And that is where it will go into your bottom line either way.
No, if you recall, earlier also I mentioned to you that in India, right, presently the oil marketing setup is dominated by the PSU oil companies. And when you have got a sector which is dominated by the PSU companies, in that case, the total thing is guided by multiple factors than one. One thing is purely the international product prices, which remains primarily the direction which decides the prices and the exchange rate. But at the same time, we need to ensure that the consumer can...
I understand that, Mr. Surana. I understand that. I understand that, Mr. Surana. I understand that, Mr. Surana. I'm asking, are you making losses right now on petrol and diesel for whatever reason? I understand that crude prices have gone up, but that would mean that a basic pricing freedom gets distorted. So that's the question that I'm asking, sir.
No, but in a process industry, this is not the product costing. There is the overall costing.
So you're not making losses. You're still breaking even.
So it is not a question of that each product you can cost separately, because from the same distillation column you'll get multiple products. Okay. So as far as a company we are able to maintain our health, that should be good enough.
No, Mr. Surana, the point is that when the stocks got re-rated, the reason was that petrol and diesel, on petrol you were making 3 rupees, on diesel you were making 1.5 rupees. Obviously, that's not the case. I just want you to be candid here. Do you think this whole process of using the lower crude prices to just increase excise has proved counterproductive? Because now you have reached a stage where, prices are almost back, the pump prices are almost back to previous high without crude being there. And now there's no elbow room to cut excise or to raise prices.
No, Anuj, what I'm trying to say is there is a crude prices, the way it moves in the market. At the same time, there is a level of sensitivity on the prices of petrol and diesel in the market. At the same time, we need to ensure that the company's financial health remains in pink. And we balance all the three. And therefore, if suppose we would have been a pure private companies, then it would have been, if there is an opportunity, if the crude prices are going up, if the petrol prices are going up, if the HSD prices are going up in the international market, then you can make whatever the profits you want to do. But as I mentioned earlier, we need to balance all the three. And as an analyst, you may like to independently dissect an MS, HSD, etc. But we don't do that right now.
Okay. So would it be fair to say that your margins in the quarter gone by would be lower than your margins, say, in the first quarter, the Jan-March quarter? That is, I mean, 2017. Would the 2017 Q4 be lower than your Q1 margins?
No, what you call as a margin is a differential of, it is some sort of the GRM in the marketing setup which you will calculate, but actually that is not the whole thing which the company retains, even earlier, even now. There are certain other thing, expenses, dealer commission, etc., etc.
Okay, sure. Mr.
Now, when you say that this quarter is lower or earlier quarter is lower, let's see, the results will be out in another 15 days' time. So then you will be able to make a better guess.
Sure, Mr. Surana, I completely take your point, especially in a country like India. I mean, there should be other considerations apart from just, gains. But we asked this because it's a listed company after all. So now so the counter question would be in this case now, if the crude prices start to fall as well, maybe that will not be the only factor driving the pump prices. In that case, you'll have to recover some of the lost ground as well.
No. The question is, we are not a pure marketing company. We are a refining and a marketing company. So the question is, the total profitability of the company is guided by the refinery margins as well as the marketing margins. So what you people are looking at is the pure marketing margins and trying to decide whether the companies will be making higher profit, lower profit, etc. But the company's profitability is decided by the sum total of all the things.
Okay.
Now, so you should be factoring in that part.
Fair point. But would it be safe to say that it is getting difficult for you to pass on prices, even if your raw material, or even if the petrol prices globally rose?
No, that is a fact that if the crude prices are lower, and again I wish to clarify that the product prices is not only function of only crude, is a crude and crack.
Yes.
So sometime it is compensating also to that effect, but it is true that if the international product prices are higher, then there is a level to which the consumers can pay, or consumers will be willing to pay, considering the overall scenario in the country which is there. Okay. So at certain level, the interventions may be required, and I think that is a fair point to consider that if it is required, it should be made. Now, if we are able to ensure that the company's financial health is by the refinery margins or something like that, then there should be a reasonable way to make it. Sure. We should balance all this.
Okay, Mr. Surana, point taken. And I take your point that in a country like us, we have to have various factors. So whatever it's worth, companies like HPCL, BPCL, and IOC have done tremendous job over the last 8 to 10 years, despite all sometimes these difficulties which arise at time to time. But thanks a lot for your time today. That's MK Surana of HPCL. But we have run out of time on Bazaar. We end the show with the markets absolutely flat at index level, but mid caps clearly under a bit of pressure.